Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to cover the big news events of the day. We're also going to show you a live real money trade that I've got cooking. We're going to start with that. Going to recap a couple trade ideas that have been rock solid. But as I was just talking with Mark Corp in the live chat here in the How to Trade Trading Room, it's really difficult sometimes to get retracements on trending markets. But when you get them, they're money in the bank. So the philosophy was you get paid to wait, not trade. And you could say that again. That's pretty much words to live by if you're going to be in these markets. Good to see you, Bobby Bob, Mark Corp. Everybody, welcome to the room. Good to see everybody. Let's get right out to some real money trading here. This is something I do from time to time. We'll probably start doing more of it. That's my futures account. Right here, we've got the E-mini S&P 500. This is a good look at the setup that I like to use. Martin, good to see you. I use TradingView for my analysis. Now, I don't care what you use, MT5, MT4. I know a lot of you are using that. The functionality is a little bit different, but the way that you can, approach the markets is the same. I always say, listen, if you don't like a platform, then go use an order entry platform and then use a platform that you like for your analytics. There's nothing wrong with that. PM says, good to see you. There's absolutely nothing wrong with that. So this is real money trade. Most of the trades we do on here are demo, but this one's real. E-mini S&P 500, I've got a key level down here. I've got sort of a key range number, which is secret sauce. Don't even ask me. I can't tell you. But that's right in the vicinity of a key Fibonacci number that we're watching very, very closely here in the E-mini S&P 500 futures. And you'll notice right over here, what do I have waiting? I have my limit order. I have my buy limit order. I got shaded entry right up in here, and I'm looking to get long there. It's going to give us a good opportunity to execute the trade to the bull. I'm bullish stocks right now. Believe me, the time's coming very soon when we're going to flip the script and we're going to look to short these markets in a big, big way. But for me right now, I'm not interested in shorting. I want to buy. I want to buy today. Had a really, really rock solid trade that came across the board on gold futures earlier today where I would basically call the bottom of that thing. You can check out my X account if you want, but that was one of those that was an absolute banger. So I'm watching this closely. You'll notice that my entry point is down the queue a bit. And when we talk about waiting to trade, this is what it is. From right now, I have no opinion on which way this market moves. I have absolutely no opinion on this E-mini S&P. I don't care where it moves. I want it to come down and get me involved down here, but if it doesn't, that's okay. The reason why is because I don't really care if it goes up or down from right now because I'm not in the market. But when we get down to this range, then we get into my kill zone, my sweet spot. I feel real confident about what price is going to do down there, and that's called capitalizing on disequilibrium of prices. We wait for that thing to move, we step in and we throw our punch, and we make our money. That's what the Fibonacci counterpunch strategy is all about. Just a quick recap, though. You'll notice right there is the top of your U.S. range. Nice big 90-minute sell-off. We sort of based, came up, failed at 38%. That was a dandy. That was a dandy sell, 58, but right about 58.03. That was really a big time sell. That's worth a lot of money if you took it leveraged. Me, I wasn't really excited about it. This down here excites me. Why? Because it's a Fibonacci retracement on a macro zone, a daily zone. Love it. Spike low back there on the 18th of September. There's today's spike high. We ran at those all-time highs. The reversal's on. I know if I get a chance to bid down here, we're going to be in pretty good shape. So I'm interested in this market. I'm going to go ahead and watch this. If we get to execute it live, I will certainly do that. Believe me, I'm not running from anything. I love my levels down there, and we'll see exactly how it plays out. So I want to welcome everybody to the live stream. We got a lot to go over today. We got to start it off with some fundamentals, and then we're going to get right back out to price action. Let's see. We've got everybody sort of weighing in. Anna Mako, the chat is back. I appreciate your patience, Anna. Had real problems with this Restream software. It's knocked the chat down for several days. So I'm back. Kalani, good to see you. Provide your view on XTI USD. All right. What is it? XTI USD? I haven't been asked that, I don't think, ever. XTI USD. Don't worry. If it has a pulse, we can trade it. If it bleeds, we can kill it. One of those deals. So we'll try that one here in a minute. Gurjit, good to see you, Gurjit. Hey, man, what's up? Not much. Hanging out. Going to get into these markets. This was sort of one of the key market events that was on tap for today, and it was an absolute nothing burger. This is one of the things about when Jay Powell speaks. You see it on your economic calendar, and everybody says, oh, it's Jerome Powell. He's going to send the markets directional. Look out. No, he isn't. Not always. This was a videotaped introduction to the 10th annual U.S. Treasury meeting. That means absolutely nothing. It means less than nothing. So when I'm looking at maybe my key markets, I thought that maybe there was something going on there. There wasn't. And a lot of times they won't really say what exactly Jay Powell's doing, but what they leave out, they sort of I won't say that they overstate something to get your attention, but that Jay Powell meeting right there means absolutely nothing. So it didn't move the markets a lick. He didn't say anything. If you need a place to trade, check out Switch, 100% credit bonus. Get on it. Right there, week 39. This is where we're at. Thursday, big news day today. SNB interest rate decision, durable goods. Jay Powell speaks. Jay Powell speaks was a nothing burger. Durable goods, not really either. SNB was a big one. We had a key level come into play for the Swissy. I'm going to show you here in a second, and also a trading plan for the Aussie Swissy as well. I think we're going to have a pretty good trade there. Remember, Tuesday, Wednesday, Thursday, we're going pedal to the metal, and we're getting after it. We're absolutely getting after it. So, I want to start off with a trade recap. This is one that we issued a couple days ago. This is a trade follow-up, and the idea was up next, buy pullbacks in gold, any pullback in gold. And you can see that's sort of our daily analytics we put out there. This was a big trade. We just didn't get the pullback. And, if at first we don't succeed, try again. And a lot of times when you don't get a pullback to your key level, the tendency or the inclination is to jump in there and try to chase a trade and get after it when you don't need to be doing that. So I'm going to break down gold for you right now. My opinion hasn't changed. You want to buy. You want to buy any way that you possibly can. So you got to be in a position where you can do that on a time frame that's going to give you that chance. Let's see, Daniel. Good to see you, Daniel. All's good here. Hope all's good out there. In any case, this is a good look at your daily. This would be my key level that I'm looking at moving forward, 2632. I think it's absolutely fantastic. Nice Fibonacci off the daily. Spike low, spike high. What was the all-time high? It was made earlier today, 2685. We're right around 2700. I don't really see, there's no doubt in my mind that we go to 2750. This is something that I've been talking about for a long time now, ever since we broke out earlier. Let's see, that was in August. What I would definitely say is I'm not interested in selling anything in the gold market until we at least check 2750. Now, the daily, you know what, like we just talked about, Mark Corp made a great point. Hey, we get paid to wait. You really do. And, I won't say that I feel bad about being on the sidelines, but we had some pretty darn good trades. I'm going to go ahead and show you maybe a time frame that'll work better than a daily. But remember, we're just looking for a spike low, just connecting trading ranges. A nice swing low, a spike low, right there to an upper extreme or a spike high. We didn't get our pullback we were looking for here, but we may get it going into tomorrow's core PCE reading. So I want to really be diligent about what I'm doing with gold, but I also know that if I want to trade it, and it's active right now, I want to make my mistakes to the long side. So when we look at something like this, I would really stress everybody to be, consistently evaluating the 4-hour chart for your spot gold contracts. And the reason why is it can be very good, and it was great to us. This move right here, this spike low that we saw back on Tuesday, and then we saw this big rally up later that day, that's a great trade. Pullback, that 38% was beautiful. That tells us that we're still trending an awful lot. The problem we have now is this market is flattened out. And a flat market is really tough to trade. We need to see disequilibrium. We need to see the market move. And if we don't get that market to move, we can't really trade it. So I'm not interested in selling this thing. If you guys want to get really tough, or what I mean is if you want to start taking risks on, say, a 30-minute, I would advise against that as well. I think that right there was the big sell, and now we're sort of grinding back in. I would really wait. I think your best chance of trading gold profitably is going to be that daily chart. And what we're looking for there is a big old retracement. Let me see, Gurjit, could you explain what on Wednesday about new home sales? Yeah, I mean, we covered it in yesterday's live stream, the new home sales numbers. I'm not too worried about it. Basically, new home sales are going up because interest rates are going down. That's sort of a leading indicator of your economic growth, but I wouldn't get too carried away with it. And that's sort of new home sales in a nutshell. If you want to check it out, go back, check out yesterday's live stream and the talk that I gave you about mortgage rates. So 30-year mortgage rates, that's the key to home sales. That's the key to all of it. So something to think about there. NASDAQ 100. All right, we'll get into the NASDAQ 100 right now, and then we'll cover some of our fundies. But first, we got to hit silver. Silver was great to us. No question about it. We had this outlined. We had this nailed. Yearly highs were up there right around 32.50. We were talking about maybe selling in front of there. If you did that with silver, you made a stack. But are we done going up? I don't think so. I think silver is going to 30, 35, 37.50, 40. I think we could hit $40 by the end of the year, given the dovish Fed rate cuts and everything. In any case, silver's been beautiful right there, 38% spike low, spike high, pullback. 31.81 was a fantastic level. Let's go right here to our 4-hour chart. Pretty good. I mean, we came right down and bounced off. You know, the real question is what do we want to do now? I would be a bidder down there from 31.80-ish still. I mean, this market's extremely bullish and one that you definitely want to check out. All right, let's take a look at that NASDAQ 100. Let's see, Gurjit, how to use the Fibonacci indicator. Swing by how to trade. Check out our elite trading series. I built a whole bunch of videos on how to use the way that I use the Fibonacci counterpunch. We've also got a tremendous amount of resources on Fibonacci's on our Forex Signals TV YouTube, and we do have some content out there on that How to Trade YouTube channel. So go ahead and check that out. That'll be a good primer on how to use it. Basically, Fibonacci's are very simple to use. All we're looking for is a trading range. We're looking for a spike low there and a spike high. That'll give us a set of support levels. And then when the market's going down, we're looking for a swing high. We connect that to a swing low, and that'll give us a bunch of resistance levels. We buy support. We sell resistance, and I go into a lot more detail on those videos. Go check them out. That'll get you set up and ready to go. All right, just a quick request then, and it's a good one. Let's go ahead and get over to this NQ NASDAQ 100 futures. Remember, this is all based on that NASDAQ 100 composite you can see right here. You'll notice that there's your big crazy candle there on the daily, your NQ, US 100. But what do we have here on the futures contract? December NASDAQ futures. This is an absolute crazy. It's an absolute crazy. I won't call it super crazy, but it's a crazy market. You know, and the reason why is because there's a tremendous number of players, and they all seemingly want to trade every single day, and that makes for great trading, but it also makes for incredible volatility. So, like if I was looking at this NASDAQ right here, you'd say, okay, Shane, how would I trade it? Well, I would back off to a weekly, just because we're a little bit late to trade the dailies. This is going to be a pretty good level for you that I would definitely look at here. See that range? Spike low, swing low right there to our upper extreme, 19,775. That would be really tough to beat. Still, though, it's about 400 points down there. We definitely want to understand where our all-time high is. That's key. All-time high is key. So we're looking right there to that high, 2137, something like that. Pull back, and then we sort of have a little bit of a formation there that still suggests that we're bullish. As long as we're above 19,775, I would be interested in hitting that trade. I think it's a pretty darn good one. But I would, still be on a holding pattern. Now, as far as a 30-minute chart goes, what can we say about our 30-minute price action? There's a couple of strategies that we could use to attack this one. One of them is the Fibonacci's. I've just run a bunch of Fibonacci levels for you. But the other one is going to be what we call the Bollinger W. And I'll do a Bollinger W clinic next week where we'll actually pull up some markets that we can attack with a W, and I'll sort of focus on that for an entire live stream. So check our schedule out on how to trade, and we'll trade that Bollinger W strategy live. But essentially what the W is, and I really like it, you have a set of Bollinger Bands on your chart. We're looking for a big sell-off. The first bottom of our W is outside of the bands. We're looking for a pullback, and now we're looking for a second bottom to really set up and give us that real crisp W formation. So once again, big bearish sell-off. That initial bottom is outside, a pullback, a second move, and that second bottom of our W is inside that lower Bollinger Band. Now, what does that mean? It means that we're playing a reversal. This is a bullish reversal strategy for your NASDAQ, which is really something. Just to sort of show you, I don't have this, like I said, I don't really trade NASDAQ futures. But what I will say is when you look at just how crazy this is, some of you probably have never seen this. This is the trading DOM for that NASDAQ futures. And I really want you to look at that yellow box. That yellow box is price. Now, each one of those boxes, each one of those price points is about $6.25 on the full-size contract. That's what I play. That's what I trade. And I would probably be looking, if I was trading this thing, to be going at least two to four contracts just to make that leverage, make these trades worth my while. Now, I'm watching this. And can you guys see that? Do you see the volatility and how fast money changes hands? It's important to understand the speed of the futures markets if you're not a futures trader. It's absolutely out. I love it. I think it's great. And once you get the rhythms, you can make a lot of money in futures. But right here, take a look at what you got. little pre-market, boom. What do you got? Nice big sell-off, pull back to 38%. The trend is still down. So if we were looking maybe to buy something, I was going to give you a level based on the daily. You'll see right here that NASDAQ just broke negative. We're starting to see some work in our E-minis as well. You would be looking to do something like this. Right there would be your most current swing low on the daily time frame. There's your top. Where would we be looking? Came right down through 38%. That happened during the overnight, or at least in the early U.S. session. But right here, 62%. The back end of that golden zone. If you're interested in the Fibonacci golden zone strategy, be sure to check out our YouTube video we put out on the golden zone. And right there, 20,176 is your buy. That's how I would see the NAS. Still bullish. I want to get in there and bid it, though. I want to get in there and bid it if I could. 20,177 probably is pretty good, but I just want everybody to take a good look at that price action and how volatile that thing is. And I've got it on Auto Center. If I didn't have the DOM on Auto Center, this thing would be all over the place. So interesting. I am more of an E-minis trader, E-mini S&P 500, just because it's a bit more manageable. But you can see if you like volatility and you like action, maybe that E-mini NASDAQ futures is for you. It's crazy, though. It's a crazy market. No two ways about it. All right, we got to cover our SNB and talk a little bit. Right now, the market does seem to be coming to me on that ES. So we're coming down. I'm really hoping we get an opportunity to execute this trade. I want to trade a live one with real money and sort of show you exactly what it looks like and feels like to have real money in play. Remember, we got 2 lots on that. That's $25 a tick. I want to watch that thing. I'm probably looking for 4 to 8 ticks. I'm going to I won't say I'm going to wing it, but I'm going to manage that trade from the hip. I'm going to do it with what I need to do to succeed, and I'm going to show you exactly how to execute a trade. In any case, SNB cuts rates. What do you got there? 1%. All right, we came down 0.25%, and that is absolutely huge. Why is it huge? Because the SNB loves negative interest rates. Always remember this about Switzerland. All right, always remember this. Very rarely are they going to pay you to hold their money. Or are they going to pay you to hold your money? They're not interested in that. They want you to pay them. Okay, what does that mean? It means a negative deposit rate is typically what makes a lot of business go in Switzerland. I'm not going to speak out of turn against the big banks, but the big banks, that is a safe haven. That's where the world puts their money. Still, that's traditional, where a lot of that goes back to the Napoleonic Wars and the way that Switzerland was sort of located geographically in Europe, with the Alps really giving them protection from all sorts of outside invaders. Now, the world's a lot different now, clearly, but a lot of those traditional ideas really hold true. Switzerland is an absolute, I would say it's just it's the center of safe haven. So when we start seeing something like this, S&B cuts interest rates, they want to get down. They want to get the rates down as low as they can, as quick as they can. They just have to do it in an orderly fashion. Right here, Swiss National Bank hits it for the rate cuts after the latest reduction. These are the headlines. Sticks with steady pace of rate cuts to restrain the franc. So what do you have there? You have a bunch of headlines that say, hey, listen, they cut by a quarter. But there's more headed our way. So right here, you can see the last 10 years of what the S&B has done rate-wise. 2015 went to a negative rate and held that negative rate, really held it through COVID. And then when global inflation really started to kick off, you saw those successive rate hikes, and now you've seen three successive rate cuts. We're going to see a race back down to negative rates, I would say, in short order, right, coming soon. I don't know that the S&B is going to be steady with these cuts, though. I don't necessarily know that, and the reason why is they're sort of the cowboys of the Forex. There's no question about it. So let me see right here, Daniel. The S&B is still checking the Forex and not scared to use intervention. Absolutely. So when you start talking about, what the S&B may do in the future, I would be very, very cognizant of a major rate cut, like maybe a point or a 3/4 point. In any case, this is a good look at our Fibonacci levels that we had outlined, and this was sort of the weekly Swissy. I put some ideas out. These are a few weeks old, but you can see right here that 38% zone that we had outlined, that resistance level right up at 85.16 is a pretty darn good one. We tested that one earlier today, and that sort of goes into the camp if it ain't broke, don't fix it. That trade's been money in the bank, absolutely money in the bank. Boom, 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 again, boom. So, right there, you took a little bit of a draw, but came back down. I would still be looking to sell that if I got a chance up around 85.15. I believe that's a pretty darn good level. So I'd be watching that closely. As far as, what do I want to do in the macro sense? Well, am I interested in buying the Swiss franc? Well, let's take a look. Not yet. We had some pretty darn good buys, though, that were on the board. We sort of outlined a few key levels, and one of the levels that we did have was right around that 84 area, if you remember right, and that sort of corresponds right here. Looks like our trade's coming our way. We're going to have to get on out there and take a look. The low right there is right there at 83, 83.32. 83.32 right there was a beautiful thing. And then what do we get? We got a bit of a test there. What was our yearly low here with the Swissy? Right at 84. So we were bidding 84s and did a nice job there. And then we came off bigly. So the next place I would be looking to bid is right down there at about 83, 83 and a quarter, maybe 83.50. That would pretty much be all I'm interested in doing from a long standpoint. Why would we do that? Remember, markets have a memory. I know that looks like a bunch of squiggly lines on your screen, but really go back. Take a look at some of this. January 2015. It's no accident that level right there sort of corresponded with that big rate cut that we saw out of the Swiss back in 2015. Right there. There's your low. Your low right there is right around, 83? Something like this. 83.03. That's going to be a big-time support zone between 83.50 and 83. If I'm playing the Swissy and I want to bid, that's what I bid, and I don't look back. Patience, guys. Absolute patience is what it takes to sort of make it, and we're trying to exercise as much as we can with this E-mini trade. Not quite there yet, 57.81. We're looking for 73 buys. We could get there, though. We could get there any minute. There's a lot of downward trajectory. All right, we do want to talk a little bit more about the Swiss franc, this Aussie Swissy. This is one of those that, has been pretty good to us. This is a 2-month, sort of a monthly chart, sort of a 2-month look at what exactly has happened with the Australian dollar and Swiss franc. So what's happened? Australian bank, RBA, holds rates. SNB cuts, sends us north. So for me right now, macro level, we're looking to sell 59.32. That's a pretty good zone. We broke above that golden zone, which is at 58.11. Let's go ahead and show you what I mean there. Still a pretty darn good level to sell. I mean, it really was. Coming off of this low, bam. I mean, that's a winner. Those are all winners. What do I want to do right now, though? We're going to get extremely current right here. That's your daily. Let's go down to a 4-hour and see if we can get a little commonality. Now, remember, if our Fibonacci's line up, okay, that's a long-term zone. That's a monthly level. Let's go right down. Let's see what our 4-hour chart says. Why would I want to trade the 4-hour chart right now in this pair? Because we still have fallout and volatility from the SNB. That's why. Right there, 58.11, 78% on that 4-hour chart. Coalesces with that 58.10. You could be looking right here. You could go from 58 and a quarter. I would wait for the big washout. I'd be looking for 58.15, something like that. I think that's a pretty good level. Let me see. Martin, could you look at the CAD Swissy? Absolutely. Gurji, do you think the gold will fall anytime soon? No. 27.50, and then we'll start talking about short and gold from there. But with the rate cuts and the geopolitical uncertainty, Russia-Ukraine escalations, Israel-Hamas escalations, and also the U.S. election, no, I don't think gold falls anytime soon. Not significantly, at least. Not significantly. All right, let's see. CAD Swissy. All right, well, we're talking about the Swissy. Let's work this one in. Four-hour chart. Is there anything significant happening here? Not really. What do we have? We have a plunging crude oil market, which is off about 3.25%. That's huge. Want to be ready for that. What does that mean to the Canadian dollar? Remember, commodity dollar. As U.S. oil falls, the Swissy, the loonie. This is the loonie Swissy. I'm loony. That's for sure. All these abbreviations knock me out after a while. But remember, crude oil, commodity dollar, it drives the Canadian dollar. As crude oil falls, what happens to the Canadian dollar, the loonie? It loses value as well against the majors. It's exactly what you've seen here. You're actually seeing the Swissy gain some ground. Personally, I don't have any problem buying it or selling it. Let's go ahead and see if we can find a level. Okay, this is interesting to me. Why? Got great symmetry. That's not quite a swing low. That's not quite a spike. That's beautiful. That's a nice sort of a hammer formation, a hammer candlestick. Do you want to buy it right now? Could. CAD Swissy bid. if you're thinking fundamentals, it's not necessarily the worst trade in the world. The trading day for WTI crude oil is about over, about another hour. You won't get any more moves out of it until maybe the London session. So you're looking at maybe taking a bid right now from 62 3/4. That's not a bad trade. That's not a bad trade at all. You can stop yourself out down here maybe 62.41 and look to get that 30 pips to the top side. The only reason I would consider that is if you get a decent day, a bullish day out of crude oil tomorrow, you got to think that Swiss franc rate cut eventually is going to kick in. This move right here today is all about the crash in crude oil and really shows you that correlation. I'm not a seller right now. I'm not a seller. I would look to buy. Would you look at the CAD? It's commit to 38 retracement. Absolutely. I mean, that's really it. So we're putting a little bit of pressure on. Remember, the level 62.75. We're trading 62.74. I'm not really going to get too carried away with that as being a breakout. Not just yet. So I think you could take that trade and probably get away with it. If you wanted to wait, you could wait for 62.44 or maybe 62.50. I just don't know that you're going to get that chance. I probably would be looking to buy here and then maybe stop myself out underneath that golden zone, maybe 41. Remember, 1 to 3% on any given trade. I don't want anybody losing the ranch on a single trade. You gotta have good leverage, gotta have good discipline. Let me see. Did you hear? Let me see. Gurji, did you hear about the pager bombs? Yeah, I did. Heard about the pager bombs, the radio bombs. That marked a major escalation. We've also watched some concerted bombing of Lebanon here. So it's an escalation. Any way you cut it, no two ways about it. Let's see right here. What do we got? You can see, I was licking my chops right there. We still may get it. I'm never going to say never, but right there, that was what I was looking for. Nice big extension. And I'm going to show you guys another trick if you like to trade symmetry trades. Number one, you would be moving your most recent. That would be the U.S. session, but that's the most recent wave on your E-mini S&P 500. The trend is down. Here's another trick you can use. I use an ADR, average daily range, but it's actually an average periodic range. And what that measures is really the average length of the price bars. I use 13 as being my baseline. Now, my my average here is an average bar range of about 11, 10.96. So if it's 11, I go to the top up here and I say, okay, what is it? 57.93. So I could project the bottom of this candle to be somewhere down around 81 or 82. Why that ADR? It's about 11. Subtract that from the top, and that's going to give you a projected range. We've made a little bit bigger range than average. So what I would be looking for on the next price bar right after we sign off, I would love to see a close right in here, right around 84, and that would take me right down to my entry point, which just to outline it one more time, I've got it shaded up to 73.25. And I'm going to look for bidders to step up right there. I think we'll get them. It's just going to be, will this market sell off another 9? Let's see, 9 and 4 is what, 36 ticks? I think it will, and I think we're going to be able to get paid off there. That's sort of dynamic thinking. Gives you a little bit of a hunch. Let's see, Santhu. I'm going to go long in the NASDAQ due to the bullish bias. Shall I? Well, where are you going to get out at? The first question you have to ask is if you're going to trade NASDAQ. If you're going to go long, why would you go long? This is NASDAQ futures, but you did sort of bounce off that 62%. Let's go to our daily. If you go long from here, you got to stop yourself out underneath there. So if it goes beneath that 20,175, then you could really see big time follow through to the downside. You don't want to get caught in this market in case it keeps plunging. I don't necessarily mind the trade, Santhu. I don't mind it. It's just a question of dialing your leverage down so you can hold this, because the rest of today, gosh knows how this thing's going to unfold. That right there, you've sort of got a double bottom there set up during the New York session right above our long-term area right there, support, boom, boom, boom. Do you take it again? Do I want to buy right here? You could. I don't know, though. If it takes this level out, we've already tested it twice. If it takes it out, it goes deep. Goes deep against you. Where would you stop yourself out? I would wait for this thing to trade down into this neighborhood again and then hit it. But that's just me. That doesn't necessarily mean that you're wrong. And another thing you could do, if you wanted to buy it right now, you're going to have a close in about a minute 12. It looks like that this lower Bollinger Band's this low is going to be inside of that Bollinger Band. You could wait for the next big green candle and buy in. That's our Bollinger W strategy. Did you pick the bottom for today or not? I don't know. We're going to find out. We're going to say out. All right, guys, let's see. That was the NQ. We've really covered a lot here today. As far as the rest of the news of the day, I'm going to briefly go through this, but I don't really necessarily know. And then we'll close with a look at U.S. oil, which is just in an absolute free fall. As far as the news of the day, GDP came in. Not really, we saw the big increase there in GDP, but these are, we already had a pretty good idea what Q2 had, so these aren't a huge market driver at all. Initial jobless claims, 218, came in down a little bit lower than the previous release and lower than expected. I would view that as being a fairly bullish market driver, but we got to be very careful with the weekly jobless claims number. In my view, they don't mean much. Be ready for NFP. That's the one you got to be ready for. I'll have that here in about, another week for you. KC Manufacturing Index, that's a huge number. It's only listed as a one-star event, but I wanted to point out just the negative 18 figure when 9 and 6 are expected. That's a huge miss. That's a huge downward miss. And natural gas storage, I put out a trade idea on natural gas earlier. Be sure to check it out. All right, guys, WTI crude, and then we're going to go ahead and call it. For me, 30-minute chart, you can see we had a nice sort of a big rally earlier today, and now we're coming off. The real question is can we get any sort of buy on a dip, perhaps? Let's go to our daily. You'll see our daily, it's just sort of disjointed. Our long-term level down there around 64.50 is a great one. You could definitely look at that spike low at 65.25. You're probably going to get paid there. But as far as like a weekly chart goes, this is really tough. It's really tough. You could do a Fibonacci from there. I don't advise it. I wouldn't necessarily buy WTI crude right now. I would wait for a bigger move. If you wanted to sell it, could you even get away with selling it? 30-minute chart, that's my bread and butter for WTI. If you wanted to sell a late-day sell, trend-following sell, that would be your level. Spike high to a spike low. Pullback sells from about 67.75. Be looking for 5 to 8 pips or ticks there. That's really tight. I don't know that I would get involved with that, but still, we're looking for a deeper pullback here. We're definitely seeing some movement in WTI crude, and it's against fall seasonality, or excuse me, it's in line with fall seasonality, but it's against a lot of our market drivers, which are supply demand. So there you go. All right, everybody, I'm going to go ahead and sign off for now. I want to thank you for joining me today. We're going to get more into crude oil. I just don't really see much until we get down maybe to that 64.50 level as being a real high probability buy. Unfortunately, our E-mini trade sort of got away from us. It sort of bounced up. We had a pretty good chance there, and it looks to me like this time of day, we're still in the neighborhood of getting it down there, getting our entry, but it looks like the bottom may be in here. Bottom may be in for the E-minis, and that's life. Sometimes you get them, sometimes you don't get them. So there you go. All right, guys, I'm going to go ahead and sign off for today. We'll be back tomorrow. Core PCE is the big mover and shaker. If you're trading tomorrow, core PCE prices is the big one. Be ready for it. That'll shake the markets up. We'll be back here to trade the fallout. Same time, same place. Hopefully we'll have another live trade opportunity and actually get to execute one with real money. But I'm confident we're going to get a shot here. We just got to wait and see exactly what happens. 11:32. I've got a few more hours in the trading day. Still within striking distance of our entry point. We just got to wait and see. All right, everybody, that's it. Take it easy. Trade the action well.